Hello, welcome to the daily recap for the 12th of the 6th, 2018. So it's Tuesday morning, and we had a trade yesterday that was very quick. It got us in kind of at the worst possible time and then ticked us out. But that's what you get when you are just following a system. Well, even if you weren't following a system, you'd still get that. It'll trigger you in occasionally and then just reverse on you instantly. But it's not very often, but it does happen. So we had that yesterday. But I'll explain that as we go through what happened. So if you look up in this top left-hand corner, you've got Euro USD 4 hour, then Euro USD 1 hour. That's what we normally have. I thought I'd because the strategy is going well, I thought I'd expand it out to two more markets, so 3 total. We'll see how that goes. If it's making less money doing that, then we'll bring it back to 1. But the strategy should work on any market. So let's put that to test. So currently looking at the Euro USD 4 hour. So the price across the left-hand side has zigzagged up, then zigzag down, breaking the low, breaking this low here. So that put us into a sell area. Then the price came up and went 10 pips above this high, which put us into a buy area. And as soon as it hit the buy, it was also a buy on the 1 hour. So that triggered us into a trade. And then as soon as it touched that, it came down and ticked us out, which we'll see on the 1 hour. But the price is just zigzagged down and then up, and now it's pulling back down again. So that's the 4 hour. So we're in a buy, but only just touched the buy. So not that changes whether or not it's a buy, but so we're currently in buy. And if it comes down and hits this red line, we'll be in a sell. So on the 1 hour, the price came up. This was the entry on the 1 hour as well as the 4 hour. The reason it was our entry is because the price back here in this zone, the price came zigzagged and broke to a new low. And so that's like sell zone on the 1 hour, and it pushed right down to this point here. So when it hit that point, the most recent high was this point. So that's like our main point of interest. So from that, 10 pips above that is where we'd enter on a buy trade. So there. And as you can see, if you follow that straight across, that's where that line is there. So that just tricked us into that trade there. So it zigzagged around, got us into the trade, and then instantly came back against us. And the reason we got out of the trade is because, let me get rid of some of this mess. As soon as we got into the trade, the most recent low was that one. So it broke to a new high. So it went from this high, down, and broke to a new high. So as soon as it breaks to a new high, that's our most recent low, and we had the entry because it broke the previous high of the main move, which was this one here. So so that was our entry, and our stop loss was 10 pips below this one, which, as you can see, was basically exactly where it turned back up again a little bit. So came down and triggered us out. So that was that trade. Then the 4 hour was still in a buy. So the price had come down to here, then pushed up to here, then down to here, making a new low. So once it did that, this zone here, 10 pips above that was where we want to get into our next trade. And the 10 pips above that was right there on this blue candle. And as you can see, that's what this red candle is pointing up, saying we got into a trade there. The reason it's red is because the trade is currently in a negative position. and this dotted line here is where we entered the trade. So if it hits this red line here, we'll exit the trade because that's 10 pips below the most recent low. 10 pips below that is this red line. And if it comes up, we will be hoping to make money. So if it comes down, we get out, and if it moves up, we hopefully end up in profit. So that's the Euro USD. So basically at the moment it's kind of in no man's land. It's not trending up well from this point from here to here. That's pretty sideways movement. So pulled down but then retraced almost that entire movement. Now it's just down in the middle of that zigzag. So like further back here we could see it was a nice up push, and then it's just kind of been wandering around a little bit. So we keep taking trades. If we ignore sections like this, if we make an impulse decision just to stay out of the market, then that will just do our heads in, because we'll always be thinking, oh, should I just sit this one out, or should I get into this trade? And if you ever start thinking like that, you're just into a spiral of doom, because you'll inevitably be sitting out winning trades and then taking losing trades, and it'll just do your head in. So if we take every trade long term, we make money. So that's what we do. We take every trade. So that's it. So 4 hour currently in a buy, and 1 hour has triggered us into a trade. So we're in a buy trade here. And then if we look at the SPX 500, that's another one I just kind of randomly chose. The SPX 500 is an interesting one. If we just look at it long term, just to give you an idea of what I'm about to talk about next. As you can see, as soon as that loads properly, there we go. So basically from 1992, which is down here, or even 1988, which is here, it spends most of its time pushing up. It doesn't zigzag like all the other charts. So the SPX 500 is the top 500 companies traded on the US stock exchange. And so inflation and things like that come into account with all this stuff. So generally, long term, it just pushes higher, which is quite a cool bias. If you know that buy trades are more likely to work than sell trades, then hopefully we get a lot of buy trades and we can just be pushing higher and higher and higher and making more and more money. So it's like an added trick, if you like, to making money on the SPX 500. It's got that one-way bias. So with not that that'll change our strategy. If it tells us to sell, we'll still sell. But what you do find is you have long periods with this one where it just slowly pushes higher and higher and higher and higher. And because we've got a trend continuation trading strategy, hopefully that means we just get into a trade and it just goes for a long time making money. So we'll find out if that's true as we take the trades. But that was one of the reasons I took this, because it does trend for a long time when it moves. So what we're looking at here is a weekly chart. So if we get rid of that, because we don't ever look at that, we'll go back to the 4 hour chart. So 4 hour chart, like from here, which is in 2016, it's not far from just a big uptrend. There are points where it would be giving you breaking to the low side and giving us sells, but a lot of it is just trending up for, what's that, like 2 years. So pretty cool. So it did pull down hard recently. It did this big zigzag. It does that occasionally. You'll see like big zigzags here, and then big zigzags down here. But then after that, it trended up for a long time. Big zigzag, trend up for a long time, big zigzag. So we don't know what's going to happen, but hopefully it trends up for a long time. So this is a bit more zoomed in. So the markets pulled down here, broke this low, so it got us into a sell bias, came up, broke to a new high, so now we're in a buy bias. Came up, broke to a new low here, so that came up and broke to the downside, then came up and broke to the upside. So when it broke to the upside, breaking the previous high, that was our entry for the trade. I missed it by a few pips, by a couple of bars. I was looking at this yesterday, and it was just a fraction higher, but I thought it was close enough to get into the trade. So we got into that trade on the 1 hour, which was over here. So 4 hour is in a buy, and the 1 hour, so this is the SPX 500 1 hour, came up, broke to a new high here, and yeah, so this is me getting in a little bit late, but still acceptable. So I got in here, then it's pushed higher, came down, and it's pushing higher again. If the price breaks to a new high, we then bring our stop loss up to the previous low. But at the moment, we are in profit of 61.8 pips. Yeah, so that's cool. And, as you can see, it's just starting to push a little bit higher again. So now it's at 63.2 pips. So that's the SPX 500. Now the other one that I pretty much randomly chose, the SPX 500 had a bit of reasoning behind it because it does trend well. The AUD USD, because I'm currently living in Australia, I thought I would just trade this one. There's no real reason other than that. It's also when you choose to create a new chart, the Euro USD is the top one, which is the heaviest traded currency pair in the world. And the next one below that is the AUD USD. So I just clicked on that. So this is just, we'll see how it goes, type currency pair. But on the 4 hour, we have the price moved from here, made a high, came down, made a low, then came higher than the previous high. So that high broke that high. So therefore, our sell bias is this red line, which is 10 pips below the recent low. Then the price came down and hit that. So we're currently in a sell. We're looking for sells on the 1 hour. So yeah, so 4 hour is in a sell zone, and then the 1 hour has come up, and it's just zigzagged higher and higher and higher and higher. And when it breaks this low here by 10 pips, we will enter a sell trade, because the price it went from here, made a high, made a low, then made a higher high than the previous high. So it then came down and made a low, then made a higher high again. So this was the most recent low, this one here. Then the price made another higher high, which means this is the most recent low. And because it hasn't made a higher high yet, this is still the most recent low. And that's the one that if it's broken by 10 pips, we enter a sell trade. So that's the reason behind that. So that's it. So just a very quick recap. Euro USD, we are in buy zone, and we're actually in a trade. It's currently a long way against us, and if it goes a little bit further, we'll get stopped out. But we're currently in a buy trade. The SPX 500, we are in a buy trade, and it's pushing up, so we're currently in profit of that, except our stop loss is still below our entry. So if it comes directly against us now, we could still exit this for a loss. But if it pushes higher, yeah, if it pushes higher, we'll see where we end up. But we haven't locked in profit on this one yet. We're just in a buy trade. And then the AUD USD, we are in sell zone of the 4 hour, and we're looking at potentially entering a sell trade if it pushes lower. And that's the three currencies. So because I'm still trading a small account, this is pushing the limits of the account. If I have 3 losing trades at once, that'll have a big impact on the on our little trading account. So I wouldn't have more currency pairs than this for quite a long time yet, I imagine. I'll probably even stick with 3 currency pairs for the next year or two. So it's we'll probably end up sticking with these 3 for a while, and only if it's more profitable doing 3 than 1. And not only profitable, but like, can I sleep at night and all that sort of stuff. If I've got 3 trades on, it might get to a point where my psychology is suffering because I'm watching 3 different trades, and if I go to sleep, I might not be able to sleep with them and stuff. So psychology is a big part of trading. If you can control your psychology, you've got a much better chance of making money. And starting small and keeping it simple is vital for that. So so it might, my expanding to 3 might be too much, but we'll find out over the next few weeks. We'll see how we go. So, awesome. That's today's recap. So I'll be doing a recap on all 3 each day from here on.